Welcome to today's podcast. And in this episode, we'll dive into the dynamic world of investments and cutting edge innovations. Ever wonder which sectors are receiving significant investments at seed stage? Well, let's uncover some standout areas. And how are generative AI, power generation, and esports shaping the startup landscape? But that's not all. We'll also explore the recent funding endeavors of Virgin Galactic. Have you heard about their successful 300 million raise? They're planning to expand their spacecraft fleet with an additional 400 million. And how are they revolutionizing space tourism and overcoming challenges? And speaking of expansions, did you know Robinhood, the popular stock trading platform, has acquired X1, a credit card startup? It is a bold move in the banking sector. And how will this acquisition align with Robinhood's mission and reshape their image after previous controversies? Lastly, let's take a closer look at Tamil Nadu's ambitious plans in EV sector. They aim to attract staggering 6 billion in investment. And how are they developing EV infrastructure, enhancing manufacturing capabilities and driving research and development? Can Tamil Nadu become India's EV capital and fuel job creation and economic growth? Seed stage funding trends, space tourism, fintech expansion, and EV investments, these topics have us on the edge of our seats today. The startup ecosystem is buzzing with innovation and potential returns. So let's dive in and explore these fascinating developments across various sectors. Now, don't forget to subscribe to our podcast for more exciting episodes where we uncover the latest trends and advancements. So let's jump in. In our first topic, we explore the fascinating world of seed stage funding trends. Ever wondered what's fueling the latest investment frenzy? One category that has been making waves is, of course, generative AI. The technology has caught the attention of investors, with companies focusing on developing AI assistants, coding insurance, underwriting, and AI generated text identification, etc. One notable example is Seattle based XCT Hub, which raised an impressive $7.5 billion dollars from VC firm Madrona. They position themselves as a platform for developing generative AI apps, and they're a startup that makes it easy for businesses to use Git for data management. But here's the burning question: how exactly does XCT Hub's platform enable developers to work with data in a whole new way? The basic idea here is to allow developers to work with data the same way they work with code, including all the collaboration features a tool like Git enables. The team describes XCT Hub as a collaborative storage platform for data management. Next, have you ever wondered how AI generated text can be distinguished from human written content? Meet GPT Zero, an intriguing startup that has captured the attention of investors and its ChatGPT detection tool. Developed by a Princeton University student with 1.2 million users and growing, ChatGPT secured $3.5 million dollars in seed funding. It's fascinating to see how AI related ventures are capturing investors' attention. GPT Zero's AI detection technology consists of 7 components to determine if a text has been written by AI. They utilized a multi layered approach to ensure accurate predictions. Their education model is specifically designed for student content, increasing the accuracy of detecting AI in educational contexts. They also perform internet text searches to prevent misclassification of commonly used text. The GPT-0 Shield acts as a defense against methods that attempt to bypass AI detectors. They employ a burstiness check to analyze the similarity of text to AI patterns. GPT-0X is a model that highlights and classifies sentences considering the probability of AI generation. And perplexity texting examines if the suggestions of their AI models match the actual words in the text. Lastly, GPT-0 employs an end-to-end deep learning approach trained on various datasets to enhance detection capabilities. Now, moving on, let's dive into the power generation sector. With modern life consuming significant amounts of power, the demand for greener, cheaper, and more easily deployable energy sources has led to substantial investments. Renaissance Fusion, a French startup, has secured a staggering $16 million in funding to pursue their ambitious goal of building a machine that can replicate the power of the sun. But how exactly does their innovative stellarator technology work? To explain in simple terms, sun is so bright and hot because it's made of fusion energy. Fusion is when two atoms are combined to form a new atom, and a lot of energy is released in that process. Now, Renaissance Future is trying to build a machine that can do fusion on Earth. This machine is called Stellarator, and it's different from other fusion machines because it's shaped like a donut. The Stellarator uses high temperature superconductors and liquid metals to create a stable plasma, which is the hot charged gas that fusion happens in. Renaissance Fusion hopes to build a commercial fusion power plant by the early 2030s. This could be a really big deal because fusion power is clean, safe, and abundant. In other words, Renaissance Fusion is trying to build a machine that can make sun's power on Earth. If they succeed, it would be a huge breakthrough for clean energy. The esports industry is also gaining momentum in the seed stage funding landscape as online sports forums and esports continue to grow. Investors are recognizing the potential for returns. Now, San Francisco based Matchday, with $25 million in backing from investors, including soccer legend Lionel Messi's playtime investment vehicle, stands out as one of the heavily funded names in the space. So, what makes Matchday and other esports venture so exciting to investors? The global esports market is growing rapidly, and it is expected to reach 1.62 billion by 2023. The growth is being driven by a number of factors, including the increasing popularity of esports, the growing availability of high speed internet, and increasing investments in esports by brands and sponsors. Esports fans are some of the most engaged, passionate fans in the world, and esports teams and leagues can generate significant revenue from a variety of sources, including sponsorship, advertisement, merchandise sales, and ticket sales. Finally, we explore the future of work and how seed financing is supporting tools and platforms aimed at filling job vacancies. Startups like Rivet, a Detroit based software company for construction contractors, and Sinclair AI, a AI powered talent acquisition tool, are attracting investments in this space. It's interesting to note that while some sectors are thriving in seed funding, tech industry recruiting seems to be less favored currently. These are just a few examples of the diverse and exciting seed stage funding trends shaping the startup ecosystem. From generative AI to power generation and esports, investors are backing innovative ideas and technology. It's an exciting time for entrepreneurs and investors alike. In our next topic, we turn our attention to what the future holds for space tourism. The latest funding developments by Virgin Galactic includes the successful raise of $300 million through an at-the-market offering of common stock, with plans to raise an additional $400 million through a subsequent stock offering. Virgin Galactic's aim is to fund the development and expansion of its spacecraft fleet. The company's shares have rallied since the announcement, and its first commercial spaceflight scheduled for later this month. With cash and securities totaling $874 million, the company is looking to secure additional funds to scale its commercial operations and expand its fleet. Will these funding efforts pave the way for a new era of space travel? Well, Virgin Galactic currently has a single carrier aircraft, VMS Eve, and one spacecraft, VSS Unity, which can conduct flights as frequent as once a month. However, the company's growth is contingent on expanding its fleet with the Delta class vehicles it is developing. The common stock offerings serve as a means to bridge the funding gap until these spacecrafts are ready for flight. The space tourism industry is gaining momentum, with Virgin Galactic being one of the key players. By securing this significant funding, the company aims to solidify its position in the market and accelerate the realization of its vision for commercial space travel. As we witness the advancements in space exploration and increasing interest from investors, it's clear that the tourism is becoming reality. Virgin Galactic's funding endeavors highlight the growing enthusiasm and support for the exciting industry. In our next topic, we delve into the world of fintech and the recent acquisition made by Robinhood. Robinhood, the popular stocks trading platform, has acquired X1, a credit card startup, for $95 million in cash. This move signifies Robinhood's expansion into the banking sector. Now, why did Robinhood venture into the banking sector and what led them to acquire X1 for a whopping 95 million in cash? X1 is a no fee credit card company that bases its credit offering on a person's income. This acquisition aligns with Robinhood's mission of providing easy to understand financial products, particularly targeting those who are new to building wealth. By acquiring X1, Robinhood's aim is to serve customers' critical financial needs more comprehensively. The credit card arm of Robinhood's expanding business will be overseen by X1 co founder Deepak Rao and Siddharth Batra, who will stay on at the company. This acquisition marks a significant step forward for Robinhood, which has faced controversies in the past. From the meme stock saga to cancelled plans for a crypto startup acquisition, Robinhood has weathered challenges along its journey. However, this move into credit card space demonstrates the company's commitment to diversifying its offering and expanding its presence in the fintech industry. The acquisition of X1 not only strengthens Robinhood's position in the market, but also highlights the overall growth and potential of fintech industry. With the rise of cryptocurrencies platform, buy now pay later startups, and now banking systems, the fintech sector continues to witness increased popularity and innovation. As Robinhood evolves and expands its product portfolio, it will be interesting to see how the company navigates the dynamic landscape of finance and attract a broader customer base. This acquisition reinforces Robinhood's commitment to providing accessible and user friendly financial services to its growing user community. And our final topic takes us to the state of Tamil Nadu in India, where there is a significant push to attract investments in electric vehicle sector, EV sector. Tamil Nadu aims to attract $6 billion in investment to drive the growth of its EV industry. Now, what makes Tamil Nadu the ideal destination for electric vehicle investment? Well, Tamil Nadu state government is working in collaboration with the World Economic Forum to position itself as a global leader in EV manufacturing. Their goal is not to only generate 150,000 new jobs, but also foster innovation and entrepreneurship in the electric mobility space. To achieve this ambitious target, the state government has developed a comprehensive roadmap that focuses on infrastructure development, enhancing manufacturing capabilities, and promoting research and development in the EV sector. During a closed door roundtable meeting, Industries, Investments, Promotion and Commerce Minister TRB Raja emphasized the importance of leveraging Tamil Nadu's strong ecosystem for automobile manufacturing to welcome EV producers. The recently announced Tamil Nadu Electric Vehicle Policy 2023 aims to entice investors and create a thriving EV ecosystem in the state. Under this new initiative, Tamil Nadu plans to attract both domestic and international companies to invest in various aspects of EV industry. This includes establishing manufacturing facilities for electric vehicle, batteries, charging infrastructure, and research and development centers focused on electric mobility technologies, etc. Tamil Nadu has already established itself as a prominent location for EV manufacturing in India. Over the past 5 years, it has attracted investments, creating close to 48,000 jobs in the electric vehicle sector, even during the challenging times of COVID-19 pandemic. With the state's renewed focus on attracting investments and building a robust EV ecosystem, Tamil Nadu is well on its way to becoming the EV capital of India. This not only signifies the state's commitment to sustainable transportation, but also paves the way for economic growth and job creation. As Tamil Nadu continues to forge ahead in the EV sector, it will be interesting to see how the state attracts and nurtures partnership and industry players. The successful implementation of their plan could have a significant impact on India's overall electric mobility landscape. That concludes our exploration of today's, highlighting key trends and developments in various industries. We discussed seed stage funding trends, Virgin Galactic's funding endeavors, Robinhood's credit card acquisition, and Tamil Nadu's investment in EV sector. From the world of startups and venture capital to space tourism and electric vehicles, it's evident that these industries are experiencing rapid growth and innovation. The evolving landscape presents both opportunities and challenges for businesses and investors alike. I hope you found these insights informative and thought provoking. As always, I encourage you to dive deeper into these topics and stay up to date with the latest news and trends shaping these industries. If you enjoyed this podcast episode, be sure to subscribe and tune into future episodes where we'll continue to explore fascinating developments across various sectors. Thank you for joining me today. I look forward to having you with me again soon. Until next time, stay curious and keep exploring.